Hello everyone, in this video we are going to see about the financial statements of not-for-profit organization. From the name itself you can identify it is an organization not for profit. So the main aim of the organization is not earning profit. The main aim of the organization is to enhance the education, or it can be established for improving the health of the providing health facilities to the people, or to do any type of service to the community. So the non-profit organization is an organization which is established not for the purpose of making profit but to serve the community. Okay, like a profit organization, the non-profit organization also prepare final accounts at the end of the accounting period. The final accounts of non-profit organization consist of the following: receipts and payments account, income and expenditure account, and balance sheet. So first we are going to see the receipts and payments account. Receipts and payments account is formed on the basis of cash basis of accounting. So it record all the cash receipts and payments just like we are recording in the cash book. It is giving us the details about the summary of cash and bank transaction under various heads, and it is giving a summarized picture of various receipts and payments irrespective of whether it is relating to the current period, or it is relating to the previous period, or it is relating to the future. It doesn't matter. All the cash receipts and payments which are received during an accounting year is recorded, whether it is relating to current year or to the previous year, or it is relating to the future. It doesn't matter. And we are recording both the capital and revenue nature items in the receipts and payments account. So this is the format of receipts and payments account. Receipts and payments account is a real account. So what is the rule for real account? Debit what comes in, credit what goes out. So receipts, whatever you are receiving in the form of cash, it is recorded on the debit side. Debit what comes in. Whatever you are paying in the form of cash will be recorded on the credit side. Credit what goes out. Okay, then the receipts and payments account starts with the opening balance of cash in hand and cash at bank, and ends with the closing balance of cash in hand and cash at bank. If the cash account or the bank account is showing credit balance, then it will be shown as a bank overdraft on the payment side. It will have an opening balance on the credit side. The receipts and payments account is a real account. It is like a cash book. So cash is an asset. So asset always shows debit balance. So here we are having the opening balance on the debit side. Mostly we will have the opening balance on the debit side as far as cash in hand and cash at bank is concerned. In some cases, when the organization has got loan from the bank overdraft, then it will be showing a credit opening balance. So this is a real account and the nature is asset account. If you see here, the subscription relating to the previous year is also recorded, and subscription relating to the current year also we have received, and the subscription relating to the future also we have received. So whatever the subscription we have received, whether it is relating to the previous year, or it is relating to the current year, or it is relating to the future, is recorded in the receipt side. And if you see here, the donation for building is capital nature, whereas the general donation is revenue nature. So both the capital nature item is recorded and the revenue nature item is recorded in the receipts and payments account. So all the receipts like entrance fees, government grant, contribution for annual dinner, rent received, receipt on annual sports, sale of old sports material, all the receipts, whatever the receipts they have received in the form of cash or in the form of check, it is recorded on the debit side of receipts and payments account. In the credit side of receipts and payments account, all the payments are recorded. Whatever the payment which is made in the form of cash or in the form of check is recorded. So whether it is revenue expense or it is a capital expense, if you see here, the revenue expense or salary and wages, rent rates, insurance, all those are revenue expense because it is going to be recorded each and every year. It is recurring expense. Whereas the furniture or sports equipments, books and periodicals, all those are capital expenditure. So in the payment side, we are recording both the capital payments and the payments which are of revenue nature. And whether it is relating to the current year or it is relating to the future or it is relating to the previous year, that is also recorded on the payment side. So all payments are recorded. Whether it is of revenue nature or capital nature, it is recorded. Audit fees is recorded, printing and stationery, honorarium, bank charges, postage and telegrams, water and electricity, all those things are recorded. Even the investments is recorded. Investments is of capital nature, but it is recorded because, as I said earlier, in the receipts and payments account, all the expenses, whether it is of capital nature or revenue nature, it is recorded. So receipts and payments account is a real account. So we are following the rule: debit what comes in and credit what goes out. Receipts and payments account is formed on the basis of cash basis of accounting, and all receipts and all payments, whether it is of capital nature or revenue nature, it is recorded. Next, we are moving on to the next income and expenditure account. So in the income and expenditure account, it is just like the profit and loss account of the trading concern. So it is a nominal account. Income and expenditure account is a nominal account. So we have to follow the rule of nominal account: debit all expenses and losses, credit all incomes and gains. An income and expenditure account is formed on the basis of accrual basis of accounting. It records only the revenue items, and the balance will indicate the surplus or deficit. This is a format of income and expenditure account. If you see here, only the revenue items are recorded. And as I said earlier, income and expenditure account is a nominal account. So what is the rule for the nominal account? Debit all expenses and losses. So here all the expenses and losses are debited. Credit all incomes and gains. So all the incomes and gains are credited. So all the revenue items, revenue expenses are recorded, and it is which is relating to the current year alone is recorded in the income and expenditure account. So consumable materials, honorarium, salary and wages, repairs, entertainment expense, expenses paid on specific show, printing and stationery, newspaper and periodicals, postage, upkeep of lawns, rent, municipal taxes, insurance, all these are revenue expenses which is recorded on the debit side of income and expenditure account. As I said earlier, this is a nominal account, so losses are recorded on the debit side. Loss on sale of fixed asset, and we are following the accrual basis of accounting, so all adjustments are written in the income and expenditure account. All adjustments are made in the income and expenditure account. Depreciation, which is a non-cash item, it is recorded in the income and expenditure account. Audit fees, miscellaneous expense, and if the excess of income over expenditure is termed as surplus. By subscription. So if you see the income side, all the recurring incomes are recorded, all the revenue incomes, revenue receipts are recorded, and it should relate only to the current year. By subscription, by grant received for general purpose. Here, if any government grant is received for general purpose, it should be credited to the income and expenditure account. If a grant is received for a specific purpose, then it should appear on the liability side of balance sheet. And here, if you see entrance fees to the extent not capitalized. So if it is not capitalized, then it is general in nature, so it is recorded on the credit side of income and expenditure account. General donation, interest on deposits, dividend, collection for a specific show, profit. As I said, we are following the nominal account rule, so credit all incomes and gains. So profit on sale of fixed asset, locker rent, clock room rent received, hall rent received, by receipts from sale of newspapers and magazines, miscellaneous income, all the revenue incomes are recorded, and that too it should relate only to the current year. So as far as income and expenditure account is concerned, we are following the accrual basis of accounting, whether an income or expense, whether it is paid or not. If it is relating to the accounting year, then it is recorded in the income and expenditure account. Even the outstanding expenses, outstanding income is also shown in the income and expenditure account. It is added with the concerned expense, or it is added with the concerned income in the income and expenditure account. So in the income and expenditure account, we are recording only the revenue expense and the revenue income, and that too relating to the current year it is recorded. The excess of income over expenditure is termed as surplus. If the expenditure is excess over the income, then it is termed as deficit. Then, in the non-profit organization, the third component of final accounts is balance sheet. Like a profit organization, the same procedure is followed while we are preparing the balance sheet of a non-profit organization also. In a non-profit organization, the balance sheet is prepared for ascertaining the financial position of the non-profit organization. And the preparation of the balance sheet is in the same manner as that of the profit-oriented organization. It show all the assets and liabilities. So it is formed just like the same procedure is followed for profit oriented organization or non profit oriented organization with respect to the preparation of balance sheet. Thank you. Thanks for listening.